Good morning and welcome to Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me live at MarketSite is Tony Zhang. He's the head of product strategy over at OptionsPlay, and we're going to focus on cryptocurrency. As always, Tony, thank you very much for joining me. And before we get into the price movement of where Bitcoin and other cryptos are now, let's talk about cryptocurrency as a whole, because Bitcoin's been around for about a decade now, but it really didn't gain any price traction until 2013. What do you think some of the current influences are out there that's moving these cryptos?
So there's a lot of things that move the cryptocurrency asset prices, everything from news, fundamentals, as well as technicals. But when we look at what types of models help describe the actual price movements in Bitcoin and other crypto assets, one of the simple models that I think stands out from the rest is one called Metcalfe's Law. And this is a theory that was originally designed to help explain telecommunication networks. And we can really think of Bitcoin as a network of traders, if you will. So the model is very simple. It simply states the value of a network is directly correlated to the square of the number of users on that network. And this has been, research has shown that this can be used to price things like social media networks as well as Bitcoin. And we see it explain a lot of the price movements from Bitcoin since 2011. There's a lot of empirical research about this. So we can actually see that the transactional value and the transactional volume that we see within these crypto assets explains a lot of the change in prices for the price of Bitcoin. So that's really what's interesting to look at is the change in transactions volume. So if we look at what happened in 2016, late 2016 to the change in late 2017, transactions volumes roughly doubled. But at the same time, what we actually saw was that the price of Bitcoin went about 20-fold higher. So that, based on this theory, that actually helps us conclude that the peak around 20,000 was really a bubble waiting to burst. And based on the current transaction volume that we see in Bitcoin, about 150,000 transactions a day, we're actually seeing that the value of Bitcoin probably should be significantly lower than where it's currently trading at, just around 7,000 right now.
Well, you had mentioned that peak that it hit in December. Now it's worth way less than half of that. Why do you think that is? Do you think it was a fad within cryptocurrency, or it's just part of the volatility that we're seeing in more mature asset classes?
Yeah, so I definitely want to say that I do think that the hype that we had in Bitcoin over the last 6 months is starting to fade, and I think we're entering a new period with crypto assets going forward. I think this period is going to be not as exciting as what we've seen over the last 6 months, but I think this is actually going to be a good thing for the industry going forward. And just a little update on price action, you know, we've had the peak around 20,000 and it's down around 7,000, but it actually just 2 weeks ago was the first time it broke below the 200-day moving average for any significant period of time, came back to test that 200-day moving average and moved lower. So that's really a bearish sign long term, because Bitcoin has been above that 200-day moving average since October of 2015. So it's a 2.5-year rally that we've seen that's just starting to end.
So in addition to the fundamentals, there's now something for technical analysts to look at as well. Now, do you think the demand for Bitcoin and other cryptocurrency is waning? You've kind of already answered that, but let's focus on the regulatory end as well. You have a number of big social media sites, Google, Facebook, Twitter, they're banning cryptocurrency and ICO-related advertising. How does that play into this?
Yeah, so exactly. So all of these things are bearish, or provides bearish pressure on the price of Bitcoin. You know, everything that you've spoken about, increasing in regulation with the SEC talking about explaining whether ICOs are deemed as securities, and the fact that they're following through on some of that. They've actually stopped a bunch of ICOs this year, shows that they are serious about what type of regulation they want to provide, and as well as the CFTC coming out and saying how they want to regulate the trading of Bitcoin. So this is all going to provide negative pressure, coupled with what you just said, Facebook, Twitter, and Google banning ads for ICOs is certainly not going to be good for the industry. However, with all of this, it does provide clarity as to how to move forward. So I do think overall that's going to be a net positive.
All right, and to wrap up, do you think on the flip side, it's a little bit out there, could prolonged volatility and downward pressure on the equity markets potentially help cryptocurrencies?
I used to not think that used to be the case. However, I do start to see that a little bit, where we're seeing the volatility in equities start to affect other markets right now, because we are seeing a lot of risk-off assets such as gold, Japanese yen, these types of things are being bought. And I certainly think Bitcoin may be part of that, even though it's still a very small piece of the market. You know, and I do think that despite all these things that I said, which is relatively bearish for Bitcoin, I do think that, you know, having stability in the price of Bitcoin and other crypto assets, having lower volatility, is going to provide certain things for this market, such as you know, as long as you get stability, it becomes a better store of value. The lower volatility means that merchants will more likely accept it as payment, which is really the two things you absolutely need for mass adoption for this. And then we can start focusing our conversations around scaling Bitcoin, because right now Visa still processes 1,000 times more transactions than Bitcoin today. So there's a long way to go before this is really an alternative currency. But I think all of these things is going to be good for the industry going forward.
All right. Well, thank you very much for joining us at MarketSite today. And traders, thank you for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.